Hello, here we go again, part 6 of this Learn Technical Analysis series. In the previous video I went through engulfing candles, a price action setup. I'm now going to move on to another price action setup, pin bars. So this is another Japanese candlestick setup that can signal market direction. Why is that important? Because if we know future price direction, we can make money from that. Okay, a quick reminder, these Japanese candlesticks, they're formed by the open, the close, which forms the candle body, and high and low, which form the candle wicks. Candlestick setups, they can show market reversal, market continuation. All this was covered in the previous video. If you've joined here, then go back and watch the previous video, or even better, just go to the beginning of this series. So pin bars. Pin bars are a single candle setup. So engulfing candles or a double candle setup, they require 2 candle bodies in order to form the pattern, in order to form the setup, the price action setup. Pin bars are a bit more simple in the sense that it's just a single candle. You're just looking for a single candle. But it does use both body and wick, bodies and wicks. So engulfing candles, it was all about the bodies. How do the bodies look, comparing one candle body to the next one. With pin bars, we are using both the candle body and the candle wick to look for this setup, to look for this signal. You can have bullish pin bars and bearish pin bars. Sometimes pin bars are called hammers or shooting stars or even kangaroo tails. There's probably other terminology for pin bars, but they're the main terms used as to describe this setup. So this is what a bullish pin bar looks like. The characteristic is a small body, so an open and close, which is similar, with a very long wick on one side, which is below the body. So we do have a wick at the top of the body, but it's very small. It doesn't really matter how small that top wick is, but as long as the wick on the bottom of the body is very long. Okay, so the wick at the bottom, if the wick was also long at the top, that wouldn't be a pin bar. Okay, so you're looking for a small body with a long wick down the bottom and little to no wick at the top. This is a bullish pin bar. So this can signal that prices are going to move up. This is a bullish setup. This can signal that price has been coming down and now it's going to start moving up, or it could be that price has been coming up and it signals that price will continue to move up. Market reversal, market continuation. So bullish pin bar is a small body, very small body, with a long wick below that body. Above you have very little wick. Bearish pin bars are the opposite. So once again, we're going to have a small body and a long wick, but this time the long wick is going to be above the body. We have no wick below the body this time. That's not important if there is a wick there or if the wick is small. But as long as there's a long wick above the body and little to no wick below and the body is small, you have a bearish pin bar. I know this is a lot to take in. If you're brand new to technical analysis and you started this course from the beginning, you have gone through a lot of material so far, so re-watch the videos. Got questions? Leave them below. I'm here to help you. I mentioned this previously. If you're watching on my website, great. If you're not, watch on the website, because the website has more material that you can go through. It will help your learning curve. So bearish pin bar, small body, long wick above. Bullish pin bar, small body, long wick below. Okay, so let's look at some examples. We have a chart here. We have a downtrend, so we can see these waves, these steps coming down, lower highs, lower lows, nice clear downtrend. In the previous video, I had a chart like this. I think price was uptrending though, and I marked engulfing candles and how they signaled price direction. And we're going to do the same with pin bars now. So this is Euro US dollar. It's the daily time frame. So we have some bullish pin bars. We have one here. So we have a small body and a long wick at the bottom. Okay, so going back here. Bullish pin bars, small body, long wick at the bottom, little to no wick at the top. So we have this. So big, long wick, small body. And then one here. So not this one next to it. So this one here with the red body has a long wick above and below. So this one to the left, we have this small body, small wick on top, long wick at the bottom. That's a bullish pin bar. Okay, so small body, long wick below. Price came down. We have the bullish pin bar. Price came up. Bearish pin bars. Okay, so long wick above this time with the small body. Price comes down. There's another one here. There's actually a lot more bearish pin bars for this downtrend than there are an uptrend, which will make sense because if price is downtrending, there are going to be more bearish signals than there are bullish signals. So nice small body, long wick above. Small body, long wick above. The purpose of the pin bar is just the same as the engulfing candle. It helps us to predict where future price is going to be, where a market could be in future. That's the purpose of all of this, is to help us predict, to analyze, to forecast where future price might be. That's what we need to know as traders and investors, because that's how we make money. So that is it for this video. Thank you so much for watching. Next up, we're going to move on to support and resistance. So I'm going to leave price action setups for now. There are many more price action setups that we could go through, which I'll cover in a future course. I've gone through the two most commonly used, two most popular price action setups. You are building a strong foundation for technical analysis. You know, I've been through what price action is, why you should trade price action, uptrends, downtrends, ranges, Japanese candlesticks, engulfing candles, pin bars. Next up is support and resistance. I am so excited for you. With a foundation like this in technical analysis, you stand a better chance of making money from the financial markets. This is not it though. There is a lot more to trading. As mentioned, this is a foundation for technical analysis. There is a lot more for you to build, but stick with this course, stick with the videos, and I'll help you get to where you need to be.